December officially closed the books on Calgary's 2025 housing market, and the numbers confirm what many people have been feeling all year long. Inventory is higher than last year, sales have slowed, and months of supply have risen into balanced territory across much of the market. But when you break it down by property type, each segment is telling slightly different stories. And what really matters for anyone planning to buy or sell heading into 2026. So in this update, I'm going to walk you through the December results for detached, semi-detached, townhouses, and apartments, highlighting the key stats that stand out, and explain what they mean for both buyers and sellers in the new year. According to the December 2025 Calgary Real Estate Board report, Calgary recorded 1,126 sales, down year over year, 3,860 active listings, up sharply, 3.4 months of supply, a meaningful rise from the tight conditions we saw previously, and a total residential benchmark price of $554,700. That confirms the overall shift into balanced territory and in some areas buyer leaning. Now let's look what played out in each property type. Starting off with detached homes. Detached remains the most resilient segment. I've said that for the past few months, but even here the tone has changed. 587 detached sales, down 4% year over year. 1,587 active listings, up 28%. 2.7 months of supply, and the benchmark price is $726,900, down 3% year over year. What stands out is that inventory rose meaningfully, and that's what softened price momentum. Looking at the year-end commentary, detached homes shifted into balanced conditions by the second half of the year as slowing sales met rising supply. Some districts, like the Northeast and East, which we've been highlighting for many months now, saw inventory exceed long-term trends, which led to localized price declines, while city center areas with tighter supply still posted modest annual gains. What does this mean for sellers? Detached homes are still selling, but pricing discipline matters. Buyers have more options now. Overpricing leads to longer days on market. Well represented, correctly positioned listings are the ones that are moving. What this means for buyers: detached is no longer a frenzy market. There's more choice, more negotiating structure, and more time to make decisions. But great homes in top locations are still competitive. Heading into 2026, detached is likely to remain stable but selective, with performance varying heavily by district and price bracket. What about for semi-detached homes? Semis continue to behave similarly to detached, but with slightly more sensitivity to supply. In December, 96 semi-detached home sales, down 23% year over year. 382 active listings, up 55% year over year. 3.98 months of supply, and the benchmark price is $666,800, down 2% year over year. Even though semis represent a smaller share of total activity, they saw stronger annual price gains early in the year and only shifted towards balance later in the cycle. By the year end, the same trend emerged: more inventory, slower absorption, moderation in pricing. What does this mean for sellers? You're competing directly with infill supply, newer products, and listings priced aggressively to capture demand. You need strong presentation and realistic pricing to stay competitive. What does this mean for buyers? Semis continue to offer value relative to detached homes, especially in inner city and emerging infill communities. Buyers entering 2026 will find better selection, fewer bidding scenarios, more leverage on listings that have been sitting. Now, row homes and townhomes. This is where the shift became much more noticeable. In December, 171 row sales down 25% year over year, 653 active listings up 37% year over year, 3.82 months of supply, and the benchmark price is 421,300, down 6% year over year. Calgary Real Estate Board notes that row homes moved into balanced and in some districts, buyers market territory early in the year as new listings outpaced demand. Two key pressures drove this: competition from new build products and rising supply in the resale segment. That combination reduced urgency and put downward pressure on prices. What's this mean for sellers? You can't rely on momentum in this segment. To compete, you have to accurately price within the active inventory, strong visual representation, and a market strategy that clearly communicates value. What does this mean for buyers? Row homes are now one of the most opportunity-rich property types heading into 2026. Buyers benefit from more selection, more negotiation room, and more better alignment between price and value. If you're moving up from apartment to entry-level ownership, this segment presents meaningful choice. Now, the one we know are seeing the biggest trend and hitting the most headlines, apartments and condos. They saw the largest adjustment through 2025, and December continued that trend. In December, 272 apartment sales, down 24% year over year, 1,238 active listings, up 20%, and 4.55 months of supply. Benchmark price is 303,600, down 7% year over year. Calgary Real Estate Board attributes a major part of this shift to increasing supply, especially from recent apartment construction and purpose-built rental, which added more overall housing choice and softened resale conditions. Even though sales declined sharply versus last year, they remained above long-term trends, meaning demand didn't disappear, but buyers gained leverage as inventory built up. What does this mean for sellers? This is the most price-sensitive segment in the market. Buyers are comparing dozens of similar listings, and anything overpriced or poorly presented is just going to be skipped. Expect longer selling timelines, higher competition, limited ability to test pricing. What does this mean for buyers? Condos now offer the widest selection in years, reduced urgency, and more favorable negotiation conditions. End users benefit most here, while investors need to approach with a strategy rather than speculation. Now, what to watch heading into 2026? The December results and the year-end commentary paint a consistent picture. 2025 has shifted from a tighter seller's market into more of a balanced environment, driven primarily by rising supply and moderating demand levels. As we move into 2026, expect for detached and semi-detached relative stable performance, selective demand, and district-specific trends. For row and apartment style, continued inventory pressures early in the year, buyer-leaning conditions persisting in some areas, and stronger outcomes for well-priced listings. This is no longer a momentum market. It's a strategy market for both buyers and sellers. Here's the 2025 takeaway by segment. For detached homes, inventory up, months of supply rising, prices easing slightly but still resilient. For semi-detached is a similar trend, with balance arriving later in the year. Row homes, you're going to have supply growth, weight on pricing and activity. Apartments, the most significant adjustment, driven by higher overall housing supply. Buyers now have more choice. Sellers face more competition. And success in 2026 will depend on pricing accuracy, presentation, and strategy. If you'd like a breakdown of how these December numbers affect your specific neighborhood or property type heading into 2026, reach out to me. I'll walk you through the segment you're competing in, how buyers are behaving right now, and what strategy makes the most sense for your goals in the new year. As always, click the link in the bio, book a call with me, click the like button, subscribe. Thanks for watching. See you on the next update.